All right. October 6th, Facebook, FB. That is probably on the NASDAQ, technology sector, internet services. And October 6th, I had this entering a stage 4 decline this month right there. And since then, where's my monthly defined breakdown line? We had that close right there below in October, below the monthly defined breakdown line. Buyers got in. You see that wick going back up. But the next month, November, sellers got all the way there. Buyers brought it back up. And December seems to be doing the same thing. It's hitting some, what I call a wall, previous resistance turn support right here from this consolidation move. And here is the natural support. More price action below the 12-month moving average, the more skewing downwards, creating that downwards pressure, those pullbacks most likely being just pullbacks and not reversals. So right here, let's see where it closes at the end of the month. If it closes above, maybe it's going to go retest that previous support turn resistance. And that'd be a great risk reward entry here. You're doing lower highs, lower lows, lower lows, and that is downtrend, guys. That's all you need. You have the 12-month moving average going downwards. That's why you're in the higher time frame. So Stan, one of his tenets, weight of evidence. Make sure the higher trend is in your favor. And now you see it. It was in your favor if you had a stage 2 since 2013. Volatility, getting away from that 12-month moving average. Huge wick, then dead to red, going back in. That's a big sign that there's something wrong. Even you had it a few months before. You had that close below the 12-month moving average. You should be out. That's a big warning sign. You should be out the stock. You don't not want to short it. You don't want to short it right there, but it's a sign that there's some weakness, some things happening, and slowly but surely, you're testing support. And you're starting to define a top pattern. And that's the way it works, guys. So once you're lower, start to make that lower low, then that downtrend has been established. Very, very, very powerful on the monthly candle chart. All right, let's go in, do some Stan Weinstein stage analysis on the weekly. October 6th was this week right there, I think. October 6th, below the Ichimoku cloud, sideways move for a few weeks, hitting that monthly defined support, but after that, the week after, broke down and kept going down until we hit some monthly defined support right here, bounce back up. That is the closest we got to be able to enter short. Red volume and continuation right there. You notice on that side, the move going up, small contracting volume. Look at that, another red candle. So much detail in the chart. Look at the huge red volume, and if it's combined with minus 17% in that week, 16.95, that is a huge damage. It's like you could see this to a video game there. This is a knockout punch there that you wound up, then bam, the guy lost over half his health. Well, that's what just happened right there. To recuperate from that, you need sideways move for a while. You could maybe go up. Here it did it, you see. If it happens earlier in the when you're still stage 2, overall health market conditions are doing good. It broke down here from this top pattern here, hugging the 12-month moving average. You see it had that huge red candle here. But it's like, let's say at the beginning of your video game, you're full health. So that's going to take off a good chunk of health. But you have a chance to survive, and here it made a comeback. The Ichimoku cloud, another line of defense, bring the price action back up. So you're starting to deconstruct. The chart is starting to break down, but it quite wasn't there yet, and that's why it's important to enter when the weight of evidence is really in your favor, because after that you could have entered here, but the weight of evidence wasn't 100% there. You still had that Ichimoku cloud defined support. And then after that, you would have got whipsawed. And this could have whipsawed any sell stop. I don't know where you would have put your sell stop. Even if you chose this high here, this last gasp of air would have triggered you out. So you never know. It's like that drowning guy always has a last shot of adrenaline, and after that, this red candle tells pretty much a whole story. Support, Ichimoku cloud, melted through that. 30-week average starting to go downwards because the price action is below it. And here I love this Mansfield relative strength indicator because you have that red overlay if it's declining, if you're below the 3-week average, and if you're underperforming the SPX. And this thing just started melting from that point on, guys. Right here. This is the candle where you could have said, okay, I'm going to short this. You still had to go through monthly defined support. So you could maybe take in half position here. And after that, when you had that monthly defined close below that breakdown line, then after that, you could take and remainder half position. And the rest is just timing another entry, looking for that volatility in that stage 4 decline. And when the price action goes up, and starts going back down, when the Mansfield starts underperforming the SPX even more, resuming its increased decline, then after that you can enter. So what's the next step? Lots of, look at all these circles. Bad. Remove, and okay, this one. Move. Okay, one more. Remove. So let's see where we close. If we close above this monthly defined support, one more day, I think, trading day, maybe we're going to go give another go at that our original breakdown line right here. And then after that, maybe go down here. So that could give a good risk to reward entry ride there. If we close below the monthly defined support right here at 130, then maybe we're going to go test the natural support right here. And if we get a bounce back, I wouldn't expect the bounce back to go much higher than that. We'll be far away from the 30-week average. But I rather that. It's more, I don't want this high here to be overcome. I like these lower highs on the weekly. And we get lower high here, slowly going down, slowly deconstructing, slowly hitting monthly defined support, bouncing back up. Then a huge rally, which could happen, and testing some higher, more important support and resistance. But either scenario, they could both happen. Just try to expect them, look at them, and see if the pullbacks on contracting volume. Then when it starts going back down, then you could enter. So that's pretty much it for Facebook, guys. Short one, but keep an eye on it. I think... look at that nice V shape. After we get through this little zone here, you could have a little vacuum to... Wow, I don't know. This is the final... The higher, the faster it goes, guys, the harder it is to identify meaningful monthly defined support. I look for sideways move for my candles, red candle close, green candle close, resistance turns support, and then natural support. So after we break down from the zone, this is pretty much where we're going to start hitting, guys. This 85 level. Ow! All right, guys. Subscribe if you enjoy these podcasts. Thanks for watching. Ciao.